Hello, good afternoon, everyone. Israel the trader speaking. So yeah, thank you very much for checking on us today. And so today we are going to be talking about how to use Fibonacci retracement, right? Because this is one of the questions that I get asked the most. So I just thought of okay, let me just try to cover this topic today in this video, right? So right now I'm going to show you how you can exactly use this Fibonacci retracement and be profitable in the forex market, right? So as you can see right here, I don't want to waste much of your time. We'll get right into the video. So as you can see right here on this my favorites, I have a lot of tools here, right? So these are the tools that I kind of use on my analysis and things like that. But one of them that we are going to be discussing today, it is called the Fibonacci retracement, right? So right now we are going to be talking about it. So, but before you know that, there are some things that we call Elliott wave theory, right? So, if you understand how to use Elliott wave theory, you can exactly know how you can use the Fibonacci retracement as well. Because Fibonacci retracement, we use it for trend continuation. Take note of that. We use it for trend continuation, and usually you can put your buy limit or sell limit. It depends on the market structure that you are trading, right? So right here, this is AUDCHF 1 hour time frame, and I'm going to first of all show you what is Elliott wave theory, but I will not get into details of that. I will just kind of give you some idea of what do I mean by Elliott wave theory, right? So right here we have what we call ABC pattern, right? Or you can call it 1, 2, 3. So it depends on how you use it. But me personally, I kind of use this alphabetically, right? So I use ABC and 1 to 5. So I use them as well. So right here, it is what we call the ABC pattern. And there's another one that is 1 to 5. So all of these, we call them Elliott wave theory. And Fibonacci retracement, you know, kind of we use it for retracement in order to retrace for this particular from this move now 1 to 5, 1 to 2 move. It is what we call the swing high. So then this it is a swing low, right? So take note of that. There's a swing low, there's a retracement or corrective move, then you now have another swing low. So this move right here, sorry for that. So this move right here, it is the swing low. So then this one, it is the corrective move. This one, swing low and corrective move. While this one, again, it is what we call swing low, So that's how it is. So today I'm going to be showing you how you can use your Fibonacci retracement to understand where exactly to buy or sell in the forex market. It depends on the market structure you are dealing with, right? So let's take for example that this ADCHF 1 hour time frame. Let me try and clear this so that since you know that this is ADCHF 1 hour time frame and we are taking an example that okay, this move didn't happen, right? So we are dealing with all of these moves. So what are you supposed to be doing is you're supposed to be knowing where your key levels are because it's very important. Anytime that you see me doing my analysis, I kind of put my key levels based support and resistance line, right? So right here, as you see, this is where the market turned to the downside, and this is another level right there, or zone, right? You can call them. So this is another one again, right there. So all of these moves, we use Fibonacci retracement to retrace them so that you can know where exactly it's ending, right? So let me get rid of them so that I can explain to you this Elliott wave theory, right? So this is Elliott wave. Now this is where the move started. You see that? So this is 1 to 5 move. So this is 1, 2, 3, 4, 5. You see that? So that's what we call Elliott wave move, right? So and of course, as you can see that after reaching to this level, formed what we call a hanging man. If you are one of my students right here, you'll be able to know what exactly I mean by this, some sort of hanging man, right? So yeah, so that's Elliott wave. Elliott wave, we use it for move continuation or trend continuation, right? And how do you understand that? So you take out your Fibonacci retracement to understand where exactly the market is going to stop moving the opposite way and continue to move in the right direction, right? So that's where we are using Fibonacci retracement when it comes to trend continuation, right? So right here, as you can see, this is the first move that happened. So let's take, for example, that this is our swing low, right? And this is the corrective move. So since this is our swing low and we are expecting the market is going down to the downside, what are we supposed to do is you're supposed to start putting your Fibonacci retracement from top to the bottom. Just observe that from top to the bottom because the market is going down to the downside. Then you start it from top to the bottom like this. You see that? And after putting it from top to the bottom, then as you can see, this is my 1%, which is 100%, right? This is 78%, this is 61%, and this is 50%, this is 38%, and this is 23%, while this is 0%. So if you're expecting the market to go down to the downside, you start from 100 coming down to 0. But if you're expecting the market to go up to the upside, you start from bottom, meaning that you start from 100 to 0. That's it. 100 to 0 if you're expecting the market to go to the upside. 100 to 0 if you're expecting the market to go down to the downside. Then your 100 is from top to the bottom. 100 is at the top while the 0 is at the bottom, right? Because you're expecting the market to go down. While if you're expecting the market to go up, 100 is at the bottom while the 0% is at the top. That's how we do it. And there are some numbers whereby we do, we do observe whenever time this retracement happens in the forex market. So as you see right here, I wouldn't have just entered right there based on the fact that you see this is a key level right here. So I wouldn't have gotten right on that particular zone. You see that? So because of this first touch, second touch, and third touch, I'm supposed to wait for breakout to happen and retest. Of course, the market did it. Then what happened after that is then since we are expecting the market to sell, to start selling from here because let's try to use our ABC pattern. So since the market started to move right here, then that will be our A, then B, and C, right? You see, perfect. So that's how it is. And if you calculate this pip, the pip is kind of okay as well. You see that? 130 pips. So it's kind of decent. And what are we supposed to do now right here is that um, I'm going to start putting my Fibonacci retracement from here because I will be expecting the market to go down to the downside at the retracement. Take note of that. So I'll take my Fibonacci retracement. So from top like this, remember I said that 100% is at the top if you are expecting the market to go down to the downside. But if you are expecting the market to go up to the upside, 100 is at the bottom. Just remember that, right? And as you can see, this is where the market came up for retracement after the corrective move, right? So the corrective move started from here to this point, right? While it started the move from here to this point again before another corrective move happened. So this is where your Fibonacci retracement is going to be. So you see that? You see that? Very perfect. Perfect. If you know how to use this Fibonacci retracement, you can easily be profitable in the forex market as well. Just know how you can use your Fibonacci retracement whenever time you are trading in the forex market. So right now, this is our 100%, which represent one right here, and this is 78%, and this is 61%. This is 50%. This is 38%, and this is 23%. While this is 0% right here. So whenever time you're trying to trade this Fibonacci retracement, pay attention to two numbers right here. Pay attention to two or three numbers. So let's take for example that we are paying attention to two or three numbers. And those numbers are what we call this, um, which is this 38%, 50%, and your 61%. Pay attention to these three numbers. Always don't forget that, because the market can either start rejecting from this 38% in order for it to continue the move to the downside or to the upside. It depends on the market structure you are dealing with, right? In this case now, we are dealing with downtrending market. So in this case, we'll be expecting it to continue the move to the downside. If the move is very strong, that's when you see rejection at this 38%. If the move is really strong to the downside or to the upside, then you now be seeing rejection at this 38%. But if the move is just normal move, the market will come up to this 50% and start rejecting it at 50% level. So yeah, and if the market retraces, so this 61%, it is what me personally I usually look out for as well, because at times I don't trust this 38%, no 50%, but 61%. Once you see a rejection at 61%, definitely the market is going to continue to go in the right direction, right? So pay attention to these three numbers, um 38% and 50%, also 61%, right? So yeah, I don't want to waste so much of your time right here. Just explain this Fibonacci retracement. If you have any question, please just let me know or comment down uh below this video, right? So that I'll get back to you. Then just ask me, hey Israel, I don't understand this or I don't understand that, right? Just trying to do that and I'll get back to you. So yeah, that's the end of today's video, guys. If you still, like I said earlier on, that if you still don't understand what I just showed you right here, just try and let me know down in the comment section. And please don't forget to subscribe to the channel. Also like this video and share with your friends and family, because my mission right here, it is to unblock forex secret for you. So if there's any of your friend that trade forex and don't exactly know how he or she can do it, share this video with him or her so that they will find the information very informative and helpful, right? Because I'm all about sharing information right here. So yeah, once more again, I'm still Israel the Trader. So thank you very much for checking on us. Subscribe to the channel and also click that bell notification icon so that whenever time I upload another video or new video to YouTube, you'll be the first person to get it. And also, don't forget to join our Telegram channel, join our Instagram page, and follow us on Twitter and Facebook as well. Let's just be connected on all of our social media platforms. So once more again, thank you very much for watching. I will see you next time in our YouTube video. Stay safe.